Good afternoon and welcome to everyone to this afternoon session on activity-based costing. It's as easy as ABC. This particular webinar is being brought to you this afternoon through cooperation between the National Tooling and Machining Association and Keyed Solutions. A few things as far as logistics before we get underway with the content this afternoon. The webinar is being recorded and a link will be sent to each of you participating today in a separate email. Because we've had such a great response to the webinar content today, all of you have been placed in listen-only mode, so your phone lines are muted. If you do have questions, however, during the course of the presentation today, feel free to open up the Q&A panel, jot your questions in there, and we'll be happy to take those questions towards the end of the presentation today. With that, let's go ahead and get underway. As a point of introduction, my name is Dave Lechleitner. I'm the Director of Solutions and Product Marketing for Keyed Solutions here in Minneapolis, Minnesota. Keyed Solutions is an associate member of the National Tooling and Machining Association, and we're really happy to co-sponsor the event this afternoon. For those of you unaware of Keyed Solutions, we are a leading cloud solution, especially designed for custom, make-to-order, and mixed-mode manufacturing companies that help to streamline operations from quote to cash. As far as the webinar this afternoon and putting together the content, as we looked at some of those critical issues that are facing high-mix and low-volume shops, costing is one of those issues that seems to be on everyone's mind. Costing jobs correctly potentially could mean increased profitability for your operation, but getting it wrong could actually mean that you might actually be faced running long-running jobs, long-running parts, and actually losing money every single time that you might actually manufacture those parts. So the intent of this afternoon session is really to help you gain some additional insight, hopefully on the importance of actually and accurately costing jobs and how to appropriately allocate the costs to the right job. So what are some of the questions that we'd like to answer for you this afternoon? I think first and foremost, it'll be important to take a look at what are those basic costing options that you do have available to you. And very often we see traditional small manufacturing companies definitely progress and get much more sophisticated as their operations grow. So we'll take a look at probably where many of you started out as far as costing is concerned, and hopefully the point that you can actually grow into, again, a more sophisticated costing solution. What are those things that you might want to consider as it relates to costing, and when does it actually make sense potentially to actually implement an approach like activity-based costing? We'll take a look at how activity-based costing actually works in a high-mix, low-volume environment, and how a company might correctly and more accurately allocate the activity costs directly to work orders and jobs out on the shop floor. We'll also take a look, hopefully, at some of the key tools that you might have in your current ERP solution, or potentially if you're looking at and evaluating other ERP solutions, what things you should be looking for to more accurately and correctly cost the work that you actually do. And then how should you actually go about implementing the principles related to activity-based costing? So let's jump right on in and take a look at kind of those basic costing options that you have available to you. You know, as I've gone out over the past 25 years or so, helping shops, probably much like many of you on the line this afternoon, implement better costing, very often we see that many small manufacturing environments usually start out costing jobs based on one flat shop rate for everything that they do. Normally, as we look at that flat shop rate, for many of you, profit was probably included in that rate, so it was traditionally more based on what the market would actually bear for manufacturing those parts. And very often it was established probably by an owner or the manager of the company based on what he or she felt the market would actually bear, versus really looking at what the true cost of doing the work through the shop might actually incur. Very often we see from there many shops moving to a little more sophisticated type of costing, whereby instead of that one flat shop rate that they have for everything that they do in their company, they might actually come up with and derive several rates, maybe based on the type of equipment, for example, that they might be running. So for example, very often we may see a rate that might be specifically geared for any manual operations that you may do versus those rates that you might have for more sophisticated machining type equipment. Very often though, again, we very often see that these separate work center rates still would include some factor related to profit. So again, as we look at those shops that have implemented what we would call work center rate costing, it again really is more based on what the market would actually bear versus again being really reflective on what the real cost of doing business might actually be. And then finally, we do have those shops, and I've worked with some shops very specifically that very close to their inception, they actually decided that they wanted to really fine-tune their costing. And so really kind of the pinnacle that many shops hopefully should aspire to is this tradition, this activity-based costing approach, whereby the costs that you actually might charge or allocate for setup might actually be different than the rates that you use once you actually hit production, and that those rates should hopefully reflect, for example, the employees that are actually doing the work. So it's a combination really of the labor cost of the employee as well as the fixed and variable costs for actually running the machine. From there, we would also look at the overhead component. For example, just the fact of employing a shop employee out there on the floor means that you as a company have certain fixed expenses that you have to also pay as well. Those fixed expenses for the employee might be such things as 401k matching, for example, or unemployment insurance that you have to pay. In addition, we all know that there are certain fixed and variable costs that you have related to the machines that are actually cutting or turning the parts, for example. And then, of course, you have all of the other expenses just to simply run the business. So really the concept of activity-based costing is that we want to try to get as close as possible to reality. How does the cost of running the business match up, and how do those costs actually get allocated across all of the work that you might actually be running through the shop floor? Now, very often we hear people that might be resistant to going through the exercise of trying to do activity-based costing, falling into and really using a number of arguments to support that view. You know, very often, obviously, as small and mid-size custom manufacturers, you might not feel that you can actually charge everything that it's really costing you to run that particular job on the shop floor. So very often we may see people argue that, well, I really can't charge that customer for all of the customer service activities that we do. We may not be able to charge the customer directly for all of the engineering work, for example, to get that that drawing file or that part ready for production. Or conversely, we might not be able to charge the customer for all of the quality that might actually go into that particular part. I would argue with you that you're paying for that regardless of whether or not it gets costed to the job. So your business is incurring all of those different costs. And so really the challenge, hopefully, is that as you incur those costs, we want to actually allocate those as closely as possible to the jobs that are actually incurring those costs. The other thing that we very often see, of course, is the fact that when you're actually quoting something, you might not actually go into the time and effort to actually really determine what the cycle times might actually be during the quoting process. And so again, very often you may be fudging the cycle times to actually come in where or under the price that your customer is willing to pay. Again, the danger there, of course, is the fact that if you win that work, and you potentially continuously win that work, you actually might run those jobs at a loss versus actually making money. And then finally, last but not least, regardless of what your costing system may say, again, there is that argument that, again, we really can't charge the customer that particular price for the part because they won't give us the order. And so very often we sometimes see the estimators, for example, having to sharpen their pencils and actually lower the cost or lower the price below the cost that it actually takes to actually run the part. Now again, if you're knowingly doing that, that's one thing. We would hope that that would be a very educated decision, for example, and a decision that you would make based upon potentially getting more work from that customer, of course. But hopefully, again, by implementing a costing approach that really tries to match cost to the actual jobs that cost is incurred on, again, will have benefits in the long run. So typically, we see companies that are considering new costing approaches as really having several triggers. So a number of questions you may want to ask yourself, for example, would be things like, is your shop implementing any new technology that might be significantly different, more advanced, or disruptive than what you're doing today? For example, lights out manufacturing. If you have machines that can actually run either totally unattended or semi-attended, obviously you would want to cost those differently than those operations that have to run fully attended. So anytime that your company is deploying new or innovative technology on the shop floor, you're likely very much at the point where you would want to actually consider looking at your costing structure and more accurately costing that newer disruptive or innovative technology accordingly. The other tipping point that we very often see with machine shops and manufacturers such as yourself is that right now you might be doing some level of costing, but you may only be using one basis for allocating those costs across all of the different products that you do. For example, you may just simply be looking at total direct labor hours, or total direct labor dollars as a percentage of cost, or total machine hours. And again, the danger there is that really the whole kind of thrust of activity-based costing is that there are different activities that should actually trigger when costing and what level of costing should actually hit the jobs that you actually do. The other thing that you may want to consider would be asking yourself, hey, if I do split out overhead today, am I just splitting that out based on one overhead rate for everything that I do, or maybe just a couple of overhead rates? Again, as you look at your operation, very often you'll probably see that certain departments may actually incur, for example, more costs than other departments. And so again, the danger with having one overhead rate for everything that you do is that you might be overcosting some jobs and undercosting others. The other thing to kind of keep in mind is that you just automatically adjust your quoting rates as the quantity of parts that you run increases. And again, that may not necessarily be true. Actually, maybe the more parts that you run, the more cost you may actually incur, just in terms of things like customer service, for example. So again, that would be another thing that I would consider and a question that I would ask yourself. The other thing that you may want to consider is, are you really, really competitive in one particular product line, but maybe not competitive at all in another product line? Again, that may be a good example where if you are, for example, using one costing rate for the entire company, you might actually be overestimating or overcosting some work and actually costing yourself out of the market. Again, the other kind of thing to consider would be looking at your individual manufacturing operations. You might actually see a number of different scenarios. You may have certain operations where an employee really only needs to be there a very small percentage of the time. The machine can actually run either totally unattended or at least partially attended. Maybe conversely, you have the opposite happening as well. You may have certain operations where you actually might have to have multiple employees actually assisting at a certain operation. And am I really capturing the true cost when those things happen? And last but not least, the other thing that I would hope all of you would consider as you look at kind of how you are costing the work that you do, you may actually have certain customers, certain type of work that you do, certain products that you do, or maybe certain markets that you serve that just inherently require different levels of selling, different levels of scheduling or production management, just different levels of customer service or support activity. And so again, the danger there is when you really haven't analyzed that, again, you may actually be leaving money on the table, as it were. You may be undercosting some work and overcosting others. Kind of the point that I always bring up is the fact that undoubtedly, many of you have certain customers that are just the worst customers that you have, just in terms of the amount of time and effort it takes to keep them happy. And so really the premise of activity-based costing is that when we have those challenging customers, am I capturing all of that cost that it takes to really keep them happy across all of the work that I'm actually doing for them? So again, as I would look at a traditional shop, for example, here is a really common scenario very often that we find. You might have kind of different pay grades of employees, for example. Maybe a certain employee is brand new, you bring him in at a certain hourly rate, you give him a certain number of days or weeks of vacation, but then conversely you have the very experienced employee who inherently makes potentially more per hour. He basically has more vacation. We're paying them over that vacation perhaps. Maybe has a 401k matching. So again, a really good example of when you might want to consider activity-based costing. When you have different pay grades of employees, when you have different machines with different capabilities, when you have brand new machines inherently that are going to cost you more to run just because you have those payments that you need to make for those machines. So really, the entire premise of what we're talking about today is that you have certain cost drivers. We call those objects or cost drivers. Those cost drivers are basically your customers or the products or services that those customers actually order. Inherently, those drivers, those cost drivers, those customers or products or services that you provide inherently have activities that are going to be associated with it. Now, again, I would challenge you to think beyond just the manufacturing activities. That's the easy part to capture. The other things that you would want to consider here would be, again, customer service activities, other quality activities, engineering activities, and trying to capture all of those discrete activities that you do way beyond the shop floor, but again, trying to allocate them and cost them directly to the work orders as closely as you can. And then those activities obviously consume resources, how that work is actually being done. So that resource could be a person, could be a machine, could be the combination of a person and a machine. So again, these are all of the things that make up what we would traditionally call activity-based costing. Customers order products, products require activities to be done on the resources that you actually own. So how does activity-based costing actually work? So the first step is really to identify all of those cost pools or those activities which a typical product or service must pass through. And again, from a manufacturing standpoint, that tends to be really, really easy. We have our engineering process that needs to happen. We have our machining process that happens. We maybe have secondary operations, outside services. So generally for manufacturers, this identification step is actually really, really easy compared to other industries. Again, what I would challenge you all that are on the line today is to also look at all of those other support activities that go into running those jobs that you have out on the shop floor. Again, I would challenge you to capture all of that customer service time, for example, all of that time that you might spend interfacing with the customer through the life cycle of that job, and again, trying to capture as close to or as much of that cost as you can directly to the jobs that are incurring that cost. Now, as you look at those different cost pools, obviously at this point then you can start hopefully looking at what is the total cost that I incur each and every time an hour of that machine is running or an hour of that person is actually spending, for example, with the customer. And then finally, at the end of the day, really estimating then and projecting, for example, well, what is the total number of hours that we are going to spend on those activities in a designated period of time? And then figuring out, well, what is the real driver to that particular cost pool that I've identified. So again, what you would then want to do is once you understand what your cost pools are and the total costs that we're looking at, then you want to start projecting, well, what's my normal level of production activity going to be? Now, again, here's where, again, I would challenge you to look at, traditionally most shops are about 80% efficient. That means across probably most of those resource pools, we would have about 32 hours in a given week that we would want to allocate cost against, times the number of resources, of course, that we have across the shop. Now, let's say that I know that I'm going to buy a new resource or I'm going to hire a new employee. Obviously, my costs will increase. And again, we now would be able to apply that cost against a particular driver. So again, as you look at this entire process, you want to look at historically what your production levels have been, but more importantly, if you are investing in new resources, investing in additional people, for example, out on the shop floor, you want to build that into the mathematical calculation as well. So how would we actually start doing this in real life? In a traditional ERP system, what I would recommend to you is try to use direct labor as much as possible whenever you can. So anytime you have an employee, for example, that is assigned to a particular machining center, for example, we would want to try to use that direct labor cost of that employee each and every time he or she does an hour of work. So that's, again, usually pretty easy. Most ERP systems will allow you to use actual employee rates whenever you're posting actual time against a work order. The next thing you want to consider would be inventory. Now here's where, again, sometimes we have some challenges. As we look at inventory, again, you probably want to get as close to actual cost of that inventory as possible. Now here's where some ERP systems could potentially fall short. Maybe some accounting systems, some other older ERP systems would only enable you to look at inventory based on standard cost, or maybe a blended cost such as average cost. Again, what I would challenge you to do is, especially those of you that have to lot control material, we should be able to, any ERP system hopefully should be able to capture as close to actual cost, even for inventory, as much as possible. Then if you have, obviously, direct purchase components, that's, again, pretty easy. If we're buying, for example, tooling, specifically for a particular work order, or any other direct purchase components, we should be costing those direct purchased items directly to the job at actual cost as well. Likewise, if you are outsourcing any of the manufacturing to an outside service vendor, whether it be for heat treating, plating, painting, whatever the case may be, you obviously want to cost that service, again, back to the work order at actual outside service cost as well. But the challenge now very often comes into what do we do about all of the other costs that the business incurs? All of the other costs that we have, in essence, just to keep the lights on. So, for example, we have buildings and grounds. You may be either leasing the building that you're in, or maybe potentially you're buying the building, for example, that you're in. You may have tooling and supplies that are used across the entire company. For example, office supplies, or, for example, tooling that I might actually use across many different parts and many different work orders, for example. You have equipment costs that just happen just because. And again, maybe it's not direct manufacturing equipment so much as indirect equipment, for example. You have human resource costs, all of those other administrative staff, for example, that are going to be, again, used to really just support the operation of the business. You have maintenance, you have utilities, you have supervisory people, for example. So how do we now go about kind of allocating that across and getting it accurately costed directly to our work orders? Well, I would, again, look at the different types of cost pools that you have and starting to break it down accordingly. So where you have those costs that are associated with direct employees, obviously we would want to factor that in as closely to the employee and the work orders that that employee is running. That's what we call direct labor overhead. Things like employer paid fringe benefits, insurance, 401k matching, profit sharing, if you have paid vacation, all of the payroll taxes that you incur. So in addition, for example, to the hourly rate of that employee, these are all of the costs, again, that you are incurring that you would want to obviously allocate to work orders that you're running out on the shop floor. In addition to direct labor overhead, you have all of those other customer support activities and what I would generally call other general and administrative expenses. Now, how do you go about actually allocating costs appropriately here? What I would start to look at across your business is, are there different customers or are there different markets that you serve that may actually require different levels of effort on your part to actually service? So, for example, you may have aerospace customers and then conversely just standard commercial customers. Probably for those aerospace customers, you have more costs that you incur just simply because of quality, or maybe customer service activities that you're doing, or accounting related work that you may have to do, or maybe potentially you're actually looking at going into a new market. So you might actually incur additional sales or marketing expenses uniquely to that brand new market that you're trying to serve. Well, again, the whole concept of activity-based costing would be such that any new work in that market theoretically should get hit with that appropriate cost. And so that's really what we're trying to talk about today, is how do I take this bucket of costs that I see traditionally on my income statement and actually start allocating that across the various work orders that we have out there on the shop floor. So again, we talked about the easy part, right? You should be costing direct labor, the actual hourly rate of the employee to the job that that employee is running. His related fringe benefits should be costed on an hourly basis to the jobs that he or she is actually running out there on the shop floor as well. But now we have all of these other costs. What do we do with those? How do we allocate those appropriately? Well, as I look at my income statement and look at specifically the expenses within that income statement, what I would try to do at this point is allocate it at least in three very general buckets, as it were. So now I'm going to take that $1 million of expenses that I now somehow have to allocate across all of the work that I'm doing out there on the shop floor. And what I would probably do is look at maybe the last 12 months, maybe do some projections, maybe out to the next 6 months, but then start to break down that big list of expenses in three general buckets. And that would be a good phase one sort of approach. So as I look at that $1 million of expenses, I might actually start analyzing it in this way. So of that $1 million, $300,000 of it in the last 12 months really related to maybe direct employee activities. So payroll taxes, vacation, holidays, bonuses, unemployment, other insurance. I may also see about $500,000 of that dollars really related to what I would call manufacturing or machine overhead, repairs and maintenance, tooling, supplies, utilities that are separate for the shop floor versus the front office, depreciation, lease payments. So any of those, again, direct manufacturing expenses that you're incurring, just again to run the business, I would start to break those out separately. And then we have all of this other stuff. We have the salaries for the people at managerial levels. We have the salaries of the office and administrative staff. We have other employee benefits. We have all of the payroll taxes related to those folks. We have utilities specifically for the rest of the business. We have depreciation related really, again, to the rest of the business. We might have sales and marketing expenses. So now basically what I've done is I've taken that $1 million, and rather than allocating it evenly across the entire company and every single job getting a hit with the same hourly rate, what I'm now trying to do is actually maybe as phase 2, break this down by department. So as I look at maybe that $300,000 of total labor overhead, I might actually see that a certain department within the company incurs maybe 20% of that labor overhead. Again, the machine overhead is really pretty easy to do. We have certain costs that we incur based upon the department that machine actually resides in, for example. So then what I would actually start doing at this point is determining for each of those different cost pools or cost buckets, as it were, how do we actually allocate that most correctly across my jobs. So for example, labor overhead, that's usually directly related to labor hours. So again, for each hour of activity that employee actually works, in addition to his hourly rate, we need to allocate the appropriate kind of fixed and variable overhead costs that we have for that employee. Now, machine or manufacturing overhead probably doesn't work well if we would allocate it based on direct labor hours, because maybe, again, many of our machines actually run unattended. So now really the cost driver to that manufacturing overhead or that machine overhead really should be based on the number of machine hours that machine actually ran out there on the shop floor. And then finally, that last part, how do we actually allocate those fixed and variable expenses that just happen just because we have the doors on? So again, what you may want to look at here might be, again, total shop hours. Or maybe even hours by customer, as it were. So then we finally get to the point of, well, what about overtime? We all know that you do it, and how do we actually allocate that portion of cost to work orders that we're running? Now, I take basically kind of the position that the challenge with overtime is it's not always the job that ran on hour 41 that really should be penalized with that overtime premium, right? We should definitely capture overtime. That's an additional cost to us, but now how do we actually allocate it out there to the appropriate job? The challenge is very often is that the job that we're running on hour 41 may have really been caused because we or actually underestimated the job that we ran on Monday morning. Or maybe it was because a particular machine went down. Or was it really sales that was actually overcommitting what we could actually deliver upon? So I would challenge you that in general, really overtime should be considered as an overall cost of doing business. Now, again, I would position from the standpoint that if you are seeing that certain areas of the shop, certain departments within the shop tend to be more prone to overtime than others, then it really should be just those work orders that are going through that particular department should be penalized, in essence, with that overtime factor. And again, probably the best way to look at overtime would be to try to spread the total cost of the overtime across all of the jobs that went through potentially that particular work center or potentially that particular department. So what are some key principles? Obviously, we would want to have unique job or work order numbers, obviously, for everything that you do. That probably is pretty standard. Most of you are probably doing that already today. You have basic information, the customer, the part, the delivery information on that order as well. You should be posting both time and material as close as possible. So we'll talk a little bit about capturing that through real-time interfaces out on the shop floor. You should also post outside processing as close to time of occurrence as possible. Now, again, we know that there are lag times. You may get parts back from the vendor, but then wait a week or two to actually get the invoice. So there should be ways within the solution to capture that, in essence, liability. The fact that you have received parts, but you have not received cost, because that has accounting implications, obviously, at the end of the month. And then, obviously, the real key of what we've been talking about today is the fact that we need to come up with some sort of allocation method by which we take all of that cost of doing business that is not directly attributable to the job and actually finding out the best way possible to actually allocate that to particular work orders. So again, I would challenge you, if you're not using actual employee rates today to drive true costing to your jobs, you need to be doing that. The other thing, obviously, your payroll solution, whatever that happens to be, should also be capturing for you all of that extra cost that you have related to those employees. So again, very often what you would traditionally see is that your pay rate in the ERP solution might not be the same as the rate that you are actually costing work out on the shop floor. So again, your ERP solution hopefully should enable you to account for that and to capture all of those other fixed and variable direct labor expenses when that employee is actually clocking time to a job. Again, the other thing hopefully that you're already doing today is you're routing jobs appropriately, you're estimating appropriately, but then the ability to actually assign costs based upon fixed and variable factors. For example, there are certain expenses that you are going to incur related to that machine regardless of whether that machine is running or not. That's what I would call the fixed expenses. And again, being able to allocate costs based upon that versus we know that there are costs that are going to be variable. You may have additional costs the more that that machine actually runs. For example, tooling is a really good example. The more that machine runs, the more tooling costs you're going to incur. The more upkeep, potentially, the more maintenance costs, potentially, you may incur. So the ability for you within your ERP solution to actually split out fixed costs from variable costs becomes really, really important. The other thing, obviously, that you should be able to do is whenever I'm doing estimating, obviously being very specific when we're quoting and potentially even down to the quantity level. So the question that I would ask you is, again, by the very nature, maybe doing a prototype part just inherently incurs more cost than running production runs. So does your solution allow you to have, for example, separate markups when you're quoting based on quantity price levels? You might actually incur multiple setups, for example. So those should be all things that you work up at the time of quoting and then capturing it, obviously, once that quote actually turns into a work order. The other thing that I think is really, really important, if you're not capturing cost in real time, you need to get there. So whether that's through barcoding, whether that's through touchscreen interfaces out on the shop floor, but all of those points at which I need to capture cost. So when I'm issuing inventory, when I'm receiving off of a PO, when I'm logging time to a job, and again, I would challenge you as well, make it easy for your employees to also tell you when they are doing indirect activities. So again, I would encourage you all to set up indirect labor codes and monitor, obviously, that indirect activity as well as that direct work that your employee happens to be doing. The other thing that is really, really critical, obviously, is monitoring cost all the way through. So from the time of work order release to the time of work order close, obviously monitoring your estimates to your actuals, comparing variances, and then at the end of the day, what we really want to do, of course, is take a look at all of those costs, basically apply it against the income statement, and ensure for all the work that you've done, for example, in that 3-month, 6-month, or 12-month period, have we appropriately captured all of the costs or expenses that my income statement actually says that I've incurred. So how do I go about actually doing this in real life? So if you are using today either that flat shop rate or maybe a couple of work center rates, I would definitely analyze if this is something that you want to dive into deeper. I love cost accounting. It's kind of my passion. I've helped about 1,500 shops over the course of the last 25 years get a better handle on costing. So again, I would encourage you, there are tons of resources that are available to you to help you get better at costing. Just really leverage it, and we'll talk about some of those resources as part of the last slide here in just a second. Obviously, this is going to be some level of work. There's some level of analysis that you need to do before you jump into it. Now, most of you NTMA members are probably privately held companies. So anytime you make any changes related to costing, if you are publicly held, potentially that has financial reporting implications. As a private business owner, as small organizations, you generally are not held to those regulations. But again, I would very much encourage you to look at, what is the time and effort to actually go through this and actually lay this out just like any other project. Because again, there will be certain things that you want to put into place. Obviously, this will have some implications as far as potentially the balance sheet and the income statement of the company. So again, I would encourage you to really look at this as a project, lay it out as a project, maybe take a look at a certain product family, a part family, maybe a certain department, and maybe implementing it first in that small pilot situation. Is it worth it? Absolutely. Generally, companies that decide that they want to get a better handle on costing will generally realize the return on investment in as little as 1 to 4 months. It's pretty exciting in working with companies like yourself, the benefits that we can actually help drive. A couple of things I think in closing today, and then we'll open it up for questions. This is a really great decision-making tool, but just like any other information tool, it's only as useful as what you do with that information on the back end. So again, I would encourage you, if you're going to go through this process of trying to get better costing, to really use it to make important business decisions on the back end. Remember that it's not really just a system, but it's a whole way of doing business. It's, for some of you, a completely different concept. The other thing to keep in mind is keep it simple to start with. Don't make it overly complex. Again, it can be a really great tool, but you can get into the weeds pretty quickly. So I would very much encourage you start simply and move to better kind of costing as time goes on. One of the resources that I've used personally that I really find beneficial is the manual published by the NTMA. They have a great manual. It's called Costing, Pricing, and Financial Management. talks to a lot of the things that we've actually talked about today. A couple of other resources specifically for manufacturing. I will say that you'll find a lot about activity-based costing that's out there, not necessarily designed for manufacturing. So again, here's a couple of different other tools that you may want to consider as well. So again, with that, I'd like to just thank everyone for being on the webinar this afternoon. I really appreciate your time. I know that you all have shops to run out there, but before we do that, I believe we did have a few questions that actually came up potentially in the activity panel. So I think with that, I'll turn it over to Kelly and she can go through any of the questions.
Perfect. Thanks, Dave, for a great presentation. Rachel wanted to know, she said that this sounds very time consuming. Is there a way to automate costing?
Yeah, you know, and again, we kind of referred to it a little bit in the presentation. One of the probably most powerful tools that many shops probably have in their ERP solution, if they have one today, is that automated shop floor data collection. So whether it's through the traditional technology of barcode scanners or, again, the new touchscreen interfaces. The other thing that's really pretty exciting for us on the technology side of the world is the fact that many machine controls now are actually Windows-based controls. So we actually have capability to really eliminate kind of the human element. So where machines have those smart controls, we've actually interfaced directly with the machine control. So talk about the ability to get actual and true costing. The best thing there is we can capture it directly from the machine control, and it totally eliminates human error right from the very beginning.
Rachel, did that answer your question? Perfect. Okay, the next question is Frank Birch. He wanted to know, he said, what do most entities do about tooling? Post at a specific cost to job or allocate it?
Yeah, great question. I would, again, the whole premise of activity-based costing and tooling becomes a real challenge for many, many shops. My recommendation would be if you see that you are consuming tooling specifically, for example, to certain types of material that you're actually cutting, for example, definitely you want to cost it as close to those jobs that are actually using that tool as much as possible. So that's what I would do. Now, again, where you can't do that, where tooling might be interchangeable, used, for example, across different part numbers, you may have an allocation method. Maybe it's a certain number of parts that tooling actually does. So rather than inventorying that tooling just as one tool, you might actually inventory it as the number of parts that that tool could, on average, actually produce. So that's one way to actually do it. So again, I would recommend looking at that. If we can truly trace that tool usage to what job actually needed that tool, I would do that. And then again, from a kind of costing approach, maybe inventory that tooling, not based on just simply the number of tools that I have in inventory, but the number of hits that tooling could actually do.
Frank, did that answer your question, or do you have anything else you'd like to ask? Perfect. Okay, Rachel also wanted to ask, what's the end result? What's the benefit to my business for doing better ABC?
Yeah, great question. So I like to go back to a story that I heard from a customer about 20 years ago. And he was coming from what I would call that traditional approach where that particular shop might have charged $50 an hour for everything they did. And they did that because that's kind of sort of what the market would bear. And he said, Dave, when I went through this exercise of kind of breaking that $50 an hour out into and looking at it from a true cost standpoint, he said, I found out I was actually running a part for about 20 years, and every single time I ran that part, I lost money on it. And I had no idea, because that $50 an hour that I was, in essence, costing was really covering up some hidden costs that I didn't even realize, right? So that's the inherent issue. If I look at costing from the approach of one flat shop rate, or here's what I need to charge because that's what the market will bear, the danger is that you take on work that your more profitable work is actually covering up, right? Now, again, the whole theory here is it's okay to run parts that you're losing money on as long as you know that you're losing money on them, right? Now, we would hope over time that you would want to eliminate those parts that are losing you money. Maybe there are certain types of parts that you do that inherently will always cost you more than the neighbor down the street. Now, you may not want to completely reject those products. Maybe you would actually outsource them instead to a particular vendor. So I really see the benefit here as being able to make smart and informed business decisions on how we run the company.
Perfect, thank you. Dave, there are no more questions. I believe that's it for the questions. Unless if there's additional questions that you'd like to ask, Dave's contact information is on the presentation, and this will be emailed out to all anyone who had registered for the event later on this afternoon.
Great. Thanks again, Kelly. Thank you, Dan, TMA, and thank you all for participating this afternoon.
Perfect. Thank you.